Okay, so last lecture, what we discussed was about the yield coupon rate. सबको समझ में आया था? Everyone got the idea about the coupon rate?
Yes, sir.
Ayan, you were not there.
Yes,
Sorry,
I was there. Yes, sir.
You were there
Yes,
when
sir, I was there.
when we dis. Okay, great. So coupon rates we understood, and then I just gave you definition of yield. Did you all understood what exactly we were talking about? What exactly yield is? No. So let's say in our example, let's say if I was talking about coupon rate, so coupon rate simply means interest. If my bond says like that, I will be getting coupon rate of 9%. This screen is visible to everyone.
Yes, sir.
So here you can see that NTPC is giving me coupon rate of 8.49. What does that exactly mean is that this will be giving me 8.49% of interest in my account. 8.49% on what? On face value of the bond. And this will be coming to my account, right? Face value of the bond is how much? 12.5. 12.50 यानी 12.5 रुपए का ये है. Let's take the other example, 1001 थोड़ा सा easy रहेगा. IRFC, it is showing how much coupon rate? 7.53. Face value of the bond is 1000, but it is being traded at 1182. That means I have to pay 182 rupees extra to buy this bond. Correct?
Yes, sir.
7.53 on 1000 rupees I will be getting as an interest in my account. Correct? Now this interest I will be getting in my account, and to buy this bond I have given 182 rupees extra. At the time of maturity, what I get back is I get back only face value, that is 1000 rupees. So that means this 182 rupees is an expense from my pocket. If this is an expense from my pocket, and what is the maturity of this bond? The maturity of this bond is 2030. That means till 21st December 2030, I will keep on getting 7.53 as a interest. 7.53 as an interest means 75 rupees 30 paisa. And this is annual interest. If I am buying one bond of IRFC, annually I will be getting 75 rupees 30 paisa in my account. And 182.10 I will not get back. At the time of maturity, I will get my 1000 rupees back, not 1182. Correct? So that means this 1182 rupees is purely an expense for me. Purely an expense, right? With me, everyone?
Yes, sir.
This is an expense. Now 75.3 rupees is my annual earning, right? Let's say that this bond I have 10 years of maturity. That means for 10 years if I'm invested into this bond, so basically I will be earning how much? 753 rupees, because 75 rupees 30 paisa every year I'm getting as an interest. For 10 years I've got 753 rupees. Now, to procure this bond, I have spent out how much? 182 rupees. So 753 minus 182, it would be somewhere around how much? 670 rupees, right? 671 to be precise. Okay, okay with the
No,
calculation?
could you repeat that? Your voice got cut off.
Okay, let me open a, what you call it? Let me open this thing. Word file for you guys, that will be better. So face value is equals to 1000, right? Coupon is equals to 7.53. That is 75.30 paisa every year. Correct? Then premium is equals to 182 rupees, which is 1182 minus 1000. Is this okay? Premium tak samajh mein aaya?
Yes,
Yes.
sir.
Maturity is equals to 10 years. Total earnings 75.3 multiplied by 10, which is equals to 753. Is it okay?
Yes, sir.
Expense is equals to 182, right? So net earnings is equals to how much? 753 minus 182, which is equals to how much? 671. Correct? Perfect. Now, if I divide this 671 by 10, because it is for 10 years, this earnings I have got in 10 years, if I have to take it out in percentage terms, so how much percentage I have got? It is
6.7.
6.71% every year. Now, my coupon rate said that I will be getting 7.53, but actually how much I got it? 6.71%. So this particular 6.71% is called yield. That means net effective in my hand. ये समझ में आया?
Yes, sir.
This we will be discussing in detail when we will be doing calculations about the bond, but as of now, understand the concept of yield, right? So coupon rate and yield both are different. In some cases, coupon rate and yield both are same also. Let's see if we have anything something like that. यहाँ पे yield बढ़ जाएगा, यहाँ पे कम हो जाएगा. In our examples, we don't have anything like that जहाँ पे yield and coupon rate दोनों same हो. So usually what happens is इसको ऐसे समझते हैं कि let's say if corporate has issued a bond today, if they have issued a bond today, so they will give you the coupon rate only, and yield would be same as the coupon rate because there is no exchange of hands. If a corporate is issuing a bond, what exactly bond is? Bond is nothing but a borrowing instrument. A corporate wants to borrow money, so they borrow money from us in the form of bonds, from the retail investors in the form of bonds. And what we as a retailer do, we as a retailers invest. So for corporates it is a borrowing, for us it is a investment, right? So basically here when they are issuing for the first time, then the coupon rate and the yield both are same because there is no exchange of hands. As soon as they issue the bond first goes to the primary market. From primary market, usually brokers and treasuries of the corporate banks buy those because they issue very heavily. That means 1,000 crores, 2,000 crores, 500 crores, 800 crores, like that. Retail investors cannot buy at once in this particular manner. So corporates and treasuries, they purchase these bonds. When they purchase, they do it from the primary market. Now, when they are selling it to us or distributing to us, they charge a little premium onto it. If they have bought that particular bond at 1,000 rupees, they might give this particular bond to us at the rate of, let's say, 1,050 or maybe 1,070, 1,080, like that. So this 50, 70, 80, whatever extra we are paying, that is the premium which we have to pay. That premium reduces our total earnings because corporate will be giving us the coupon rate here like 7.53%. This coupon rate directly comes from the corporate who has issued, IRFC in this case. So IRFC has issued this bond. IRFC will be giving 7.53% of interest rate into the account of a person who is holding that bond in his or her demat account. Got it? So that person will get directly this much. But again, your yield gets down because you have paid premium onto this. Okay. So net effective, we are getting less. In this example, which we just discussed, here our coupon rate was 7.53, but effectively we are getting somewhere around 6.71%. That means our yield is lower than coupon rate. In maximum cases, yield is lower. In few cases, yield goes higher where your coupon, where your bond starts trading at the discount. Like example over here, IIHFL last traded price is how much? 988.7. Face value is 1,000. If you're buying this bond at the rate of 988.7 and at the time of maturity, if you submit this bond to the corporate or to the issuing corporate, you will get back 1,000 rupees. That means you are earning somewhere around 11.30 paisa extra. So your coupon 9.6, there's additional income which is added, right? So this additional income gets added to your 9.6. So your yield would be little higher. So when your bond is getting traded at discount, then your yield increases. If your bond is getting traded at premium, then your yield decreases. But yield is net effective, how much you are getting in your hand. Is that clear?
Yes, sir.
Yes, sir.
Great. Now,
Sir, I have a question.
yeah, please tell me.
Can you go back to sharing your screen on that?
Yeah, just a moment. Yeah, tell me.
So now if you look at the second from the bottom,
This BTF
no,
2014
one below that,
IIFL.
yeah, that
IIFL.
one.
Correct.
So now over here, this is discounted, right? It's in the
Correct.
face value is 1,000, and so
Correct.
now the credit rating over there,
Hmm.
it shows as negative, not stable.
Correct.
So which one affects what? Is it negative because it is discounted, or is it discounted because it is negative?
It is negative. That's why it is discounted.
Okay.
So if your credit rating is lower, if your credit rating is not good, your bonds gets higher coupon rate. First impact is on the coupon rate. You will get higher coupon rate for this. These coupon rates will be higher. Second is that the demand of these bonds will be less, and because of which they can be traded in the you can say discount. So lower credit quality of the bond pertains to directly to the discount in the coupon rate or discount in the face value. That's it. Did I answer a question?
Yes, sir. Yes, sir.
Great. So basically now effectively you understood what exactly yield is, right? When I'm saying yield, so just tell me how the yield is getting impacted. The yield is getting impacted because of which factor? One, which Elsa discussed, that it is because of the credit rating. Let's say the credit rating is one factor which is impacting, but it is not impacting much. Like AA is okay, AAA is okay. So if I'm talking about, let's say, all AAA rated bonds, all have similar ratings and credit scores are same. Still, the yields get changed. So what is the other factor which impacts, or what is the main factor which changes the yield?
Comparative interest rates, as in FDs or
It's not comparative, it is the overall interest rates in the economy.
right,
So
right.
so if like RBI is increasing the rates, that means interest rates are getting increased. So what gets impacted directly? Ananya, any idea? Let's say in monetary policy committee, RBI says that we are increasing the rate by 25 bips. Bips, you understand? Basis points, everybody understands? No. Okay, let me go to our paint. Paint means word. So 1% is equals to 100 basis point. So whenever we are talking about the interest rates, we always talk in the basis points. So when RBI says that I am increasing rate by 25 bips, that means which is equal to 0.25%. Basis point in short form is written as bips. So whenever you are talking about interest rates, any article, if you are reading there, it will be clearly written that 0.01% is equals to 1 bip. This will be written. Money control पे कभी भी article पढ़ना when they are discussing about MPC committee, monetary policy committee, then this is always mentioned, always, right? So from here on, remember the what exactly BIP is. So when Ananya ma'am, so when RBI says that we are increasing the repo rate by 25 bips, 25 basis points or 0.25 percentage, what does that mean? First of all, second is how does that impact? Yeah, who is the first which get impacts? Yeah, which gets changed? What is the first thing which gets changed or impacted? Ananya ma'am, you are there,
Sir, I'm here.
but little confused, huh?
Yeah.
So at least cameras तो on करो आप लोग. Ayan, Harsh, else Anirudh is sleeping. We saw when he was trying to connect with lights off and everything.
One second.
Yeah. Ayan, Harsh, you there?
Yes, sir.
तो बताओ, अगर आरबीआई इंटरेस्ट रेट बढ़ा रहा है, रेपो रेट बढ़ा रहा है, तो पहले इसका क्या मतलब है? And okay, sir, I'm so sorry because probably mistake is mine because I'm taking on the wrong time. Enjoy your dinner, that's okay. So when RBI is increasing the repo rate, right? RBI says that I am increasing the repo rate by 25 bips or 0.25%. what does that mean? उसका क्या मतलब है? सबसे पहली चीज. Second thing is कि what gets impacted directly and first. And am I audible? Network
Yes,
गया.
sir.
अच्छा, okay, I thought कि network गया. बोलो. नहीं समझ में आ रहा?
No.
No.
अच्छा, चलो, इंटरेस्ट रेट बढ़ा तो आपका एजुकेशन लोन लिया है किसी ने?
नहीं.
सब अमीर घर से हो, गरीब घर से मैं ही हूँ मतलब. ओके, पापा ने लोन लिए, बिजनेस फैमिली
हाँ.
से हो, लोन लिए हैं,
हाँ.
तो कोविड टाइम्स में कभी पापा को बोलते हुए सुना कि अभी एक्सपेंस मेरा बढ़ रहा है एक्सपेंस क्योंकि इंटरेस्ट रेट बढ़ रहे हैं?
हाँ.
करेक्ट.
Yes, sir.
एफडीज बनती हैं बैंक्स में, कभी पापा ने, मम्मी ने, किसी ने फिक्स डिपॉजिट बनाए हो तो कभी सुना उनके मुंह से कि अभी इंटरेस्ट रेट बढ़ गए हैं तो अभी एफडीज बना लेते हैं, हायर रेट मिलेगा?
हाँ.
Do we hear on a regular basis कि whenever RBI increases the rates, then it is always demanded by the RBI or maybe the central government that banks should also increase the FD rates, fixed deposit rates? सुना है?
Yes, sir.
So basically, when I'm saying repo rate, so what does chalo, in that case first let me understand कि if you know it or not, what is repo rate?
So repo rate is
The rate at which RBI
हाँ.
lends money.
Rate at which RBI lends, correct. And what is reverse repo rate?
The rate at which the commercial
Banks.
banks
At
lend
which
money.
RBI take loans. इसको simple,
Yeah.
just keep it simple. Repo where RBI lends, reverse repo where RBI borrows. Take it that way. So which will be higher amongst the two?
Repo.
The repo rate is higher than reverse.
Why?
So because RBI दे रहा है क्योंकि
It's rare for RBI to borrow money.
Banking,
borrow.
no, it's not rare
So
for
I
RBI.
think in terms of anyone, if I'm borrowing money, I'd want more in return, right?
Correct. Correct. It is not always necessary. So it is sometimes other way around also, but here we simple have to apply the logic that business of the banks is borrow money and lend money. Any bank. RBI is the banker to the government. So RBI is also a banker. So ultimately, if RBI has to earn money, how they will earn money? Borrow money and lend money. And to answer your statement, ma'am, ki it is difficult to that RBI will borrow. RBI borrows in other way around. RBI borrows, but in other way around because they keep liquidity, securities, na? CRR, SLR, they keep with them. So banks keep those monies, park those monies with RBI, and they have to do it compulsorily. So that's why reverse repo rate is there, that RBI has to spend out money on those. So basically, with simple logic, if the business of the bank is to take loan and to borrow money and lend money, so RBI will always have to keep it the borrowing rate at the lower side and lending rate on the higher side so that they can earn in the spread. Simple, correct? So when RBI is increasing the repo rate, so what will be impacted? Which institutions will be impacted? Banks will be impacted directly, correct? So what they will increase first is they will increase loans.
Loan.
सबसे पहले एफडीज का रेट बढ़ाएंगे वो लोग, फिक्स डिपॉजिट्स, रिकरिंग डिपॉजिट्स के रेट्स बढ़ेंगे. विल दे इंक्रीज द डिपॉजिट्स रेट्स?
सब बढ़ेंगे लेकिन बाद में, मतलब
बाद
ऑन अ
में.
लोअर एंड.
क्योंकि that is the outgo from their pocket. So they are always, banks are always eager to increase the loan rates first, but they are reluctant to increase the deposit rates because deposit is their outgo, and they make margins in between till they increase the loan rates, and they are not increasing the deposit rate. That means outgo is less, incoming has increased. Ultimately they earn good money out during these pockets. So whenever RBI has to tighten the policy, they tighten the banks also, that if we have increased the rates, so you have also have to increase the rates of your loans as well as your deposits. Loans का नहीं भी बढ़ाते हो तो deposits का बढ़ाओ. Now thing is कि when repo rates is increasing, right? So there is one benchmark which is being what you can say monitored, yeah, which is always referred for investment purpose, which we majorly call as a risk-free return. That means if we invest into it, so this is the amount we should at least get in our investments. FD rates जो होते हैं, fixed deposit rates, वो एक बेंचमार्क को रेफर करते हैं, एंड दैट बेंचमार्क इज कॉल्ड GSEC 10-year yield. GSEC as in government securities 10-year yield. I'll write it down on these things for your benefit. GSEC 10-year yield. This is benchmark for fixed income interest rate. Now, right now, this 10-year yield is somewhere around 7.16%. Somewhere around. This is government bond. This is also a bond. This is a government bond. Government of India. GSEC means government securities. So government of India, and who issues these bonds? RBI issues these bonds. If RBI is issuing these bonds and RBI is giving you 7.16%, so let's say that you are getting FD at the rate of 7%, or maybe you are getting FD at the rate of 6.79% or 6.9% in from a bank, that is the SBI. Will you invest into that, or will you invest into the RBI GSEC bonds?
So what is the interest for the GSEC bond?
7.16.
GSEC.
Obviously GSEC, safe
Obviously,
plus.
GSEC. Correct, because it is issued by RBI and it is the safest in the country, and that is the benchmark for all your investment. So when you are deciding any investment on the debt side, leave aside debt side, you are deciding any investment, what you will think of ki if I am getting anything over and above 7.16, then only I should consider that as an investment, because every investment has a risk attached to it. May it be AAA bond also, it also has a risk attached to it. If every investment has a risk attached to it, then definitely I will always prefer RBI. If I am not getting anything over and above that 7.16, even if I am getting 7.20 in some other bond, or maybe in some equities, I will prefer RBI, because that I know that this is guaranteed. Guaranteed in a sense that if RBI fails, I don't need any money, because money will not be of any use. It will only be a piece of paper. And if RBI is not failing, then my money is guaranteed that my money will come, because RBI and central government both are guaranteeing the money. So my money will automatically come. So I can sleep like a baby that my investment is a safe hands, right? So we always look our investments further to it कि 7.16 तो मुझे RBI दे रहा है, अगर मुझे कहीं इन्वेस्ट करना है तो मैं कहाँ पे इन्वेस्ट करूँ, इससे बेटर मुझे अगर कब मिल रहा है, because if I am investing into equities is a highly volatile market, it contains a lot of risk. If I am not being rewarded as per the risk I am taking, I will not go to equities. Mutual funds, I will not go to mutual funds. On debt side also, I will avoid going to debt side if I am not being rewarded sufficiently. So that's why coupon rates which we look into the bonds, corporate bonds, we find they are always above than RBI, right? Now there could be a question कि अभी जो हमने slide देखी थी उसमें शायद RBI से ऊपर नहीं थे सारे. Let's see, we have REC Limited. I'll just share it for you guys. Can you see REC Limited at the bottom, 7.22?
Yes, sir.
Right?
So,
So right now the yield of RBI bond is 7.16 and REC is giving 7.22. Though it is AAA rated, but it is already expired. December 2022 का ये. It has expired at that time, so it was very less. Now thing is कि maturity के अब coupon rate जो है, coupon rate बहुत पुराने भी होते हैं. Because coupon rate doesn't change. We have already understood that coupon rate never changes. What changes is the yield, right? Guys, right or wrong? सो गए, नहीं समझ
Yes,
में आ
sir.
रहा?
yes, sir, yes, sir.
हाँ, एटलीस्ट बोलो साथ में, otherwise I'll be confused.
Yes, sir.
समझ नहीं आ रहा है, right? So if I have issued coupon rate, so IRFC, if I have issued, let's say today, if I have issued, it is carrying 7.53. It is having AAA rated category, but still it is one notch below RBI. 7.53 is 40 bips a good reward. I can take it. But if I look into the yield is coming out how much? 6.71. So when we talk about any bonds, we don't only talk about coupon. We try to understand what is the yield, what is the net effective I am getting. In RBI, you get exactly yield and coupon are the same. You don't have to pay much of the premium to buy an RBI. So yield is higher. Here yield goes to 6.71. So in this case only, the IRFC bond which we discussed, you will prefer to buy RBI yield, RBI bonds, right? Now the bonds are issued for different time periods. 2 years, 5 years, 7 years, 10 years, 30 years maturity. Now, when we are talking about different time periods of maturity, 10-year is the benchmark. When I said ki 7.16, it is 10 years benchmark. So 10 years benchmarks remains there. Now bonds are issued at a regular frequency. ऐसा नहीं कि 2021 2010 में एक bond issue हुआ था that got matured in 2020. Now in 2020 next bond will be issued. No, every frequency, with a certain frequency, every time bonds are getting issued. Right, so 10-year का bond issue होता रहेगा regularly because government needs money. What actually the RBI is doing with this particular bonds is government is trying to borrow money. RBI is just an issuer, so this money is going to the government. So every now and then this money gets borrowed by the government. And why do government borrow money and why this frequency comes up? Because during the budget, government says how much money they are going to borrow. And this this borrowing plan is now redistributed throughout the year, and these bonds are issued at a certain frequency, certain interval. So 10 years yield is a benchmark where we understand कि okay, ये जो yield है this remains constant with us, या ये 7.16 अभी आया है, and यहीं से मुझे पता पड़ेगा how my economy is doing good. If my 10 years yield is rising, that means if I am getting rewarded for longer period of time to invest, that means there is something in the economy which is getting changed, which is interest rates. Interest rates are rising. So interest rates का direct impact पड़ेगा bond yield पे, debt market पे. If bond yields are risen and your equity market is giving you return somewhere around 10%, 11%, so people, if you're getting 7.16% return with a certainty, with a guarantee, and you are getting 10-11% of return where there is no guarantee, you don't know कि today you put money, tomorrow it can be half or 50% or 80% or 70%, you don't know that, right? So there is no guarantee. Leave aside the guarantee, there is no certainty also कि what will be the levels, correct? So will you put money over there or will you put money over here? You'll always love to go at the certainty side, because investors don't like volatility. They want to stay very sure, very certain कि what is happening. If negative thing is happening, they want to be certain in that कि how much negative, what is negative. They are okay with negative things. It's not that they don't invest in negative times. They invest in fact more in negative times. But till they are not certain, they don't invest. Here bonds are certain. They will say कि we are happy with 7.16% because interest rates are rising. Till when they will rise, we don't know. And this is something where we are getting higher rewards compared to what? The equity markets. Not in terms of percentage standalone, but in terms of risk and reward. So they will stick to this. So people try to move towards the you can say debt side if longer term investment, that is 10 years and above, is giving you higher rewards. Now longer term yields rises when interest rates at the base rises. Now interest rates rises when? Why do RBI rises interest rates? I gave you a theory. I'm not sure whether I discuss it with you guys or not, because 3-4 sessions अलग अलग चल रहे किस क्लास के साथ में की, even I forget. RBI is a juggler. 3-ball theory, did I give it to you? No. So RBI is a juggler. Just consider. Yeah, Esther, tell me.
So I think we've discussed this before. You can either have growth, inflation, or you can either control two of these things, not all three at the same time.
Correct. So basically, right now the scenario is that inflation is going high. Commodities inflation is going high, and it has been going high. Now we are more or less about to control that, or more or less at the around the peak. Still, government has not said, RBI has not said anything that they have controlled it fully. No, they said if measures required, we will again raise the rates. They have said if required, we'll watch. We'll be very careful in watching. If the inflation is in control, we'll be very much happy to reduce the rates. But inflation is rising, so to control the inflation, they have to increase the rates. If rates are increasing, then definitely economy will be slow. The growth will be lowered. In that case, equity markets will not perform. We can see that for last 1 year, equity markets have been range bound. They are not performing well. In fact, for that matter, if we look at the Nifty index from 18,300 in 2021 to May 2023, 18,300, almost same level. Less than 1% increment in 2 years. That means it doesn't mean that market didn't went up. Market went up, it came down. Again, it went up. So it remained range bound. And at the end of the time, they ended almost at the same level. Less than 1% increment in 2 years. That means equity market practically did not give any return for 2 years. If the levels of the Nifty is same, that means there is no return. But if the money was invested in the bonds gave you good returns. 6%, 7% at least you made with certainty. So when inflation was rising, the interest rates were rising. When interest rates rise, yield of the bonds rise. So people shift money from equity market to debt market because they know when interest rates are rising, equity markets performance get jeopardized. They will perform, they will not perform, that is on higher probability, or they will perform very minutely, so that is on higher probability, but risk of uncertainty gets increased. So investors shift their money from equity to debt. This is what they do, right? Now when we talk about the yields, then as I said, there are two time periods majorly. One is short term, one is long term, right? Short term, when we say that 2 years, 5 years, that is a short term period. Majorly 2 years is the period when we have to compare it. So yields of these two periods gives us an understanding that if our economy is in a good shape or not. So if I am rewarding you to keep your money in the bank for 10 years by giving you, let's say, 7.5% of returns, that if you keep your money with me for 10 years, I will give you 7.5% every year, right? On the second side, if interest rates in the economy are rising and I'll say that you keep your money for 2 years with me, for the 2 years periods lock in with me, I'll give you somewhere around 7% of returns. Which option will you choose?
Sorry, sir, can you just come again? Second option.
For 2 years, I'm giving you 7% of returns. If you're keeping your money for 2 years with me, I'm giving you 7% of returns. If you're keeping your money with me for 10 years, then I'm giving you 7.5% of returns. Which instrument will you choose?
The first option.
10 years.
2 years.
2 years. Because in lesser period of time, you are getting higher returns comparatively, right? This 10 years does not change much drastically, but 2 years is changing. Rates are increasing.
So, but if you look at the compounded effect, like plus 7.5%,
correct,
wouldn't you get more of a yield?
You will get more of a yield on the compounded interest. I completely agree to it. But again, the scenario is changing. नहीं, time होता है, ऐसा नहीं है. Scenario is changing and you are getting higher reward compared to your higher reward is not in absolute terms, because time is also you can say a big factor in your investments. If more or less or the similar rewards you are getting for a shorter time frame, why would you stay invested in the market? There is no reward for the time. For your time investment, there is no reward. You are getting reward for your money, which is only 0.5%. For time, you're not getting reward, or rather I would say for 8 years extra, you are getting 0.5% of reward, which is not worth it, right? So it is not lucrative enough for you. So that's why what happens is the difference between longer period and shorter period always remains very much. The spread is very much. When this spread starts getting reduced, that means the shorter period, because whenever economy is rising the rate, the shorter period interest rates rise very drastically. Longer periods interest rates does not change easily. They are like elephant. They will move slowly, not very heavy feet. But shorter period, they rise exponentially. They rise very fast. SVB Bank ka case, which has gone right now. Any joke? You remembered any joke or any case? Any, you can share, that's okay. See, I also had a tough day. I can understand. Today I can understand your situation, because I have been asked to sit to take lectures. Take lectures, matlab to attend lectures from 9:30 morning till 6. So I can understand your situation. What exactly it is happening with you guys. I can understand कि कितना torturous होता है. But still, मैं 1 घंटे में छोड़ देता हूँ. तो ऐसा कोई joke है तो बोलो. At least everybody will rejoice that.
So I just laughed at what you said. You said shorter things rise exponentially, which I found a little funny.
Okay, got it. So basically what happens is ki shorter time frame yields, they rise exponentially, and longer time frames, they stay constant. So the spreads keep on reducing. Let me try to see if I have on this over here. So this is a normal yield curve. What happens is on a shorter time frame, this is interest rates, this is term of maturity. So lower the maturity, lower the interest rates, higher the maturity, higher the interest. This is a normal scenario. When this yield curve starts this thing getting on the other side, guys, just a moment, I'm getting a call. Oh, I'm so sorry, I did not share that. Just a moment, just a moment. Okay. See, this is a normal yield curve. On left hand side, this is interest. On y-axis, sorry, this is interest rate. On x-axis, this is time of maturity. So the lesser the time of maturity, lesser the interest rates. Higher the time of maturity, higher the interest rate. Somewhere around here, it is 10% or 10 years. So from 10 years onwards, your yield curve is more or less flat. This does not get impacted much from 10 years onwards. May whatever be the scenario, this does not get impacted much. So it is more or less straight flat curve. Now, when I say that the yield curve, this is a normal yield curve, this is called as normal yield curve. When I say that your interest rates in a shorter period are rising, correct, and longer period or the long duration, it is getting comparatively, it is getting reduced. So for that matter, let me try to draw. I think we can draw on the paintbrush, right?
Yeah. Sir, even with PowerPoint, you can draw.
Achha, I'm not getting it somewhere. So anyways, यहीं पे कर लेते हैं. Is this I mean this is visible, na paint?
Yes, sir.
Okay. Let me see. Chalo. See, let's say this is 2-year yield curve. So 2 years has been rising in this manner, right? And this is 10-year yield curve. Somewhere here. Right? Now this is rising constantly, and 10 years also going little higher. ये नीचे नहीं जा रहा है, ऊपर ही जा रहा है, थोड़ी drawing की वजह से ऐसा दिख रहा है. But 2 years is getting, this one is 2 years yield curve. This is getting above it. So what happens is कि अगर आपका normal curve होता, normal curve में क्या होता कि shorter time frame has a, I mean the bond which has a maturity lower than the high, I mean short term maturity, this is having a lowest interest rates or lowest yield, higher in maturity has higher yields, correct? Here what happens is higher maturity is having lesser yield. This is higher maturity, this is 10 years, correct? This is 2 years. So 2 years has surpassed over the 10 years. So yield curve has actually inverted. So how does this yield curve looks like? This yield curve looks like this. For short-term maturity, we are having higher interest rates. This is the scenario which happens during the times when crisis comes, जहां पे government को बहुत short term में interest rates बढ़ाने होते हैं. So in last 1.5 or 2 years after COVID, government has increased the rates from between 3 to 4%. 3 to 4% is a big change. It's a big change. So in that case, what happened is that the short-term maturity bonds are getting higher yield, and they have actually gone above the long term, because long term is not now much famous. It is okay, ये तो है, ये कहीं नहीं जाने वाला, ये यहीं रहेगा, because that yields does not change much. They shift very slowly. But short term है कि थोड़े टाइम के लिए मिल रहा है पैसा, बटोर लो. And it gives you ease to shift also. जल्दी खत्म हो जाएगा और बढ़ गया तो you can change easily. बड़ा वाला है, उसकी डिमांड कम होगी तो ये इतना पॉपुलर नहीं होगा, तो you will not be able to change that also. So your short term maturity bonds get higher yield and your long term maturity bonds get lower yield. So this is called yield curve inversion. ये समझ में आया? Yield curve inversion?
Yes, sir.
Everyone?
Yes, sir.
Because this yield curve inversion, understanding of yield curve inversion is important to understand the economy. Now tell me, does this yield curve inversion gives you any indication about the economy? Like as I said, कि when does this yield curve gets inverted? Yield curve inversion तब होता है जब interest rate short term में बहुत तेजी से बढ़ रहे हैं, correct? बहुत तेजी से interest rate कब बढ़ेंगे? When there is a crisis in the economy or when the economy is not balanced, and to bring down the economy to a normal state, interest rate has to be risen, correct? So अगर interest rate बढ़ रहे हैं constantly, so yield curve invert हुआ है. What does that indicate?
Yes. Short term, I mean, crisis
there is a short-term volatility in the country, and that will impact directly markets. Inflation की वजह से हम लोग rates बढ़ा रहे हैं. Inflation के साथ में एक और bad word हम सुनते हैं ना, jobs cut होती है, क्या बोलते हैं उसको?
Recession.
Recession.
Exactly. So recently, if you might have gone through the news and the articles, you might have heard that India is nowhere looking at the recession. There is 0% chance of recession in India, but there is a good chance of recession in US and Europe. Why so? Because their yield curves are inverted. Their short-term maturities have actually surpassed their long-term maturities yield. And recession ka technical definition, if we have to look into, then technical definition is that yield curve has to be inverted. Second is, or rather major is, that for 2 consecutive quarters, the growth in the economy should be negative. Every quarter we get GDP data, every quarter, that what is the GDP growth of the country. For the start of the year, government says, yeah, central bank says that we will be growing, let's say, by 8%. Right? Then every quarter they give the data ki okay, agar we have to grow with 8% for the year, this quarter we have grown by, let's say, 7.5%, right? In India, since it is a growing economy, we get growth on the higher rate. And what is the growth rate somewhere around in US? That is a developed economy. Wahan pe growth rate hoti hai 1%, 2% like that, right? So 1%, 2%, but for any 2 consecutive quarters, if the growth rate is negative, that means instead of growing, they have actually come back. During the crisis, this happens. So technically, if any economy has grown negative for 2 consecutive quarters, that economy can be called in a recession. Practically, we can call that economy as a recession, unless any economy which has not gone for 2 consecutive quarters in a negative growth, we cannot call it as a recession, right? So yield curve inversion is an added indication to it. If any economy has gone for 2 consecutive quarters in a negative growth and yield curve has also inverted, that means that economy is in a very bad shape, right? That is the main indication, or that is the main understanding of the yield curve inversion, right? So yield curve gets inverted and your economy is performing negatively for consecutive 2 quarters, then recession is there. And this is the reason why we are saying that US markets or the US as an economy is going into recession. They are still struggling because their growth is negative. Their growth has been negative for consecutive 2 quarters. And the yield curve is inverted. Let's see if we can get some yields over here. That will help you to understand more. Startup portfolio, commodities, mutual fund, videos, markets, global US.
So the class is until 8:30, right?
Yes. We'll just find out because I understand you all have to go for dinner, right?
Yeah, that's why I asked.
So 8:30 your dinner starts or it ends?
It starts at 8, it ends by 9.
Ends by 9. Okay, chalo, तो yield curve I'll show you some other time. Let me just take the attendance and leave you guys. खाना तो खाओ कम से कम, नहीं तो गाली बहुत देने वाले हो आप लोग. खाना भी नहीं खाने दिया. ये समझ में आया सारा? Yield curve का yield curve inversion से क्या benefit होता है, इसको आगे अपन कंटिन्यू करेंगे.